Morning. Test, video test, audio test. How are we doing with the video and the audio? Dobro dan, dobro veče, dobro jutro. Josan. Buenos dias. Buenas noches. Wherever you are in the world. Yeah, exactly, Dimitri. Good time of the day to all. Exactly. All right, I'll just wait one more minute for the rest of the attendees to come in the room and we'll get started. I'm Jay. I'll be the host of this webinar for you today. The order page is on the main screen there. You should be seeing that, as well as my email, jay@ninjaorderflowtrader.com. You can reach me through Skype as well, jay.noft. And also the YouTube channel is on there. I've put that in the go-to chat. I'll just paste that again. So you have that. I'm actually posting webinars and trades to my YouTube channel as well now. So you'll be able to see them faster there than you will anywhere else. So you can go there and subscribe and like and do all those nice things. Make comments, even if they're positively constructive, shall we say. And give me 30 seconds here. I'll just drink some water and we'll get going. Hey Bob, hey Wayne. Okay, well, without further ado, let's get started. Let me see if I've got the spy in here. Is he in here? He's not in here right now. Okay. How many of you are new? How many of you have not heard me speak before? Seems like we got a lot of you. Hey Robert. So we got a lot of you who have been here before, who have heard me speak before. All right, before we continue, just a reminder that futures, forex, and options trading is risky, and therefore you can lose money. So you should only trade with risk capital. That's capital. If you were to lose that capital, it would not affect your lifestyle or retirement plans adversely. Please understand that no guarantee of income is being made today. Neither is any solicitation of any security being made. And also understand that everything we do and say in these webinars and any of our promotional material in any media form is for educational purposes only. And please consult your financial professional before investing in any kind of financial instrument or making any significant investment. Be aware of and know the risks. Just a quick note regarding the webinar recordings. The webinar recordings are uploaded to YouTube and are sent out at the end of each week to all the people which have registered. Okay, so you should register for all the webinar events even if you're not able to attend in order to receive the recordings. If for some reason you don't receive an email with the recordings, and that can be as late as Monday or Tuesday of the following week, simply because we do have webinars on the weekend as well. Make sure to check your spam or junk folder before contacting customer service. If after registering for all the webinars and checking your spam or junk folder and you still haven't received the links, please send an email to customerservice@ninjaorderflowtrader.com. Okay, I don't have access to get you on the list for the videos, so send it to customer service at ninjaorderflowtrader.com, or as I mentioned earlier, usually I'll have the webinars uploaded to my YouTube faster, so you can check out the YouTube channel. So this is a common slide. If you've been to my webinars before, you know that my whole thing is, I guess it's because of where I came from as a trader. I was struggling as a trader before I met Kai Whitney, and Kai was a driving developer behind the NOFT. Okay, he was the one that came up with a lot of the ideas that I'm going to share with you today, such as block trades, stack trades, things that he had learned on the inside as an institutional and prop trader. And the things that are included in the NOFT now, I value them so much simply because we used to have to do all these things manually. We'd have to look at a chart, a bid-ask chart, bid-ask ladder, volume footprint ladder, whatever you want to call it, the tape. It has various names out there. But basically it's a chart with, buyers on the right and sellers on the left, the number of contracts actually bought and sold at each level. And so having to read those numbers without any real significant highlighting or meaning behind them was, it was quite a task. And one of the things that I was struggling with a trader was I felt I had a decent method. However, the problem was I could never confirm my levels. And through Kai's guidance and tutelage, he helped me see the light with how the footprint, the bid-ask ladder could actually help me confirm my trades and get in on the right side with a higher probability of success. And that was, at that time, it took about, to get used to the footprint and get a grasp of it, it took me about, I guess, 45 days. And then I kind of saw the light of what that was about, but it still involved going through and doing a lot of, I guess, legwork, homework. There's still homework involved even with the NOFT, but it makes it a lot easier because so much of it is displayed on the chart automatically. So if you're kind of at the end of the rope in your trading career, and you're kind of looking for that last thing that you think, okay, well, I'll try this, and if it doesn't work, well, forget it. That's exactly where I was when I met Kai, and he took me through that process. So there is hope. We can help you, okay? If you're still struggling and you're trading using lagging indicators, the NOFT can certainly help you as a tool. If you are familiar with the bid-ask footprint or the tape, and you're finding it challenging, the NOFT can really help you simplify that. And if you're profitable already, the NOFT can certainly move you from being a good trader to a great trader with a little sweat equity. I'm going to move quickly through the slides and just go to some charts today. The main theme of this webinar is, where is the real supply and demand? And I'm going to show you. On the charts, even from yesterday, how we can identify that real supply and demand. So I'm just showing you at the beginning of the webinar charts sent in by our users. Okay, these are people who are actually using the NOFT, not me. All right. And in future webinars, I think I'm going to invite some of our current users in and let them make the testimony, so you don't have to hear it from me. So anyway, this user identified an area here on this chart up around 75.44 on crude oil. And for me, looking at the NOFT, once you get used to looking at it, it becomes fairly obvious. And they've noted a couple things on here as well. What the NOFT is going to do, most of our indicators you can toggle, okay? So you can just, you don't have to, go Control I or right click on your chart and then go to indicators and take off the indicator or put it back on. You can toggle it directly from the menu bar within each chart, okay? So what this person has displayed are block trades, all right? What block trades are is they're a trade of a minimum size or greater. So let's say, for example, 25 have to be greater or equal to that size. And so unless an order comes through of 25 contracts or greater, it's not going to display anything. Now, so that setting is customizable, but just for simplicity's sake, let's just say 25 contracts minimum on something like crude, all right? So if an order comes through of 25 contracts or greater, what the NOFT is going to do, it's going to draw these lines, these horizontal lines that you see here, up near the top, up near the high of this chart, okay, around 75.50. You see that block trades start coming in, and these are highlighted in red. Hey, good morning, Apurva. These are highlighted in red, and so these are the institutional block cells, okay? These are block cells coming in. So whatever this person has this set to, I'm just going to make the assumption that it's 25, for example. So at this level, we're in an obvious uptrend, and as we've come up, all of a sudden we get block sellers coming in, large sellers coming in. So I mean, if we just count the red lines, or the actual red, the red cells, we've got 4 of them. Okay, there's four red lines up here. All right. So we've come up into a level that the user has identified. They see that block traders or larger traders are coming into the market on the sell side, and according to this screenshot that they've sent, trade entry short 44. How far does it go? It goes all the way down. It looks like to 74.77. Okay, so that's a nice little take there. All right, so we're talking what, 60 ticks about. So that's a pretty good take there. Whether they got it all, I don't know. They're just saying that that's where they took trades. They got their second short at 02. Okay, and at 02 they had identified a level here. I guess 75.02. They got a yellow dashed line here that they had identified, and I can see why they were looking around that 02. You still have looks like a lot of block selling coming into that level, and you actually have a very large aggressive selling level. There's 695 contracts being sold on the sell side, highlighted in red. That's another aspect of the NOFT that we call imbalance. We'll talk about that in a minute. But anyway, even from 02 down to 77, you still got another 22 ticks potential. All right. Now, what's even funnier about this chart is after we make this run, where do we come back up to? We come all the way back up to just short, exactly at 44, which is 1 or 2 ticks below where the institutional block sales had come in previously. So again, this isn't my chart. This is somebody else's chart. I'm just showing it so that you know that you can do this. You can learn to read the NOFT very easily. All you got to do is put in a little bit of work, and everything is drawn automatically for you on the chart. So another screenshot sent in by a user. Okay. This time we have an imbalance zone drawn in green. Okay. These zones are also drawn automatically on the chart for you. Again, you can toggle it, all right, in the menu bar of the chart. Okay, so that's what we would call stacked imbalance. All right. So that's easily toggleable. If you want to take those zones off, or you're getting too many zones on the chart, well, you can just take that off without actually having to remove the actual indicator. Okay. Also on the chart, you're seeing green and red numbers. Okay. And then this person has the neutral numbers highlighted. I guess they're colored in magenta. So turn your attention to the red numbers. The red numbers represent aggressive sellers, and the green numbers represent aggressive buyers. Now, what these how these aggressive buyers and aggressive sellers are defined is they are, excuse me, they are a multiple of the other side of the market. So if you have buyers on the right, sellers on the left, okay, what we're looking at is there a percentage greater number of contracts on one side than the other? So for example, let's say I have a imbalanced setting within the Ninja order flow sequence tracker, which is the main engine of the NOFT. Let's say I have that set to 300%. What that essentially means is before a number gets highlighted, one side or the other, it has to be 3 times greater than the other side. Okay? What do I mean by that? Let's say, for example, on one side, let's say on the sell side, I've only got 15 contracts, but on the buy side, I've got 50 contracts. Well, 15 into 50 is greater than 3, correct? So that's going to highlight this 50 on the buy side. That's going to highlight that in green. And vice versa. If I had 50 contracts on the sell side, and then let's say only 10 on the buy side, well, 10 goes into 50 5 times, which is greater than 3 times, all right? We just use the example of 300%, right? So that's going to highlight that number in red on the sell side, okay? And so that's imbalance within the order flow sequence tracker. Within the NOFT iGhost block, the NOFT iGhost block takes that concept of imbalance and then it looks for them stacked. So let's say I had, let's just say to make it easy, let's say I had 50, 50, and 50. And then 10, 10, 10, okay? Well, these are all imbalances, okay, and they're all stacked one on top of another. What that's going to do then is that's actually going to draw a zone out into the chart, okay? So that's exactly what we see happening up here from 79.68, it looks like, to 79.72. There's actually this green zoning here. That's a stacked imbalance zone, okay? So these kind of imbalanced zones, and we have actually block zones as well. These are areas of support and resistance actually displayed on the chart automatically by the NOFT, okay? And it's used, the zones are drawn using market generated information. In other words, the contracts actually bought and sold, okay? Not from the DOM where you can have, fictitious orders or spoofing, orders that are pulled. Actual contracts that have come through the exchange that have actually been bought and sold. And it's drawing, based on that, it's drawing these zones on the chart and establishing these imbalances. So what this user has identified is that as we came up into this imbalance zone, all of a sudden, as we're going up, first of all, you can see that most of the numbers in this slide, as we're going up, most of the aggressive contracts are buy contracts, okay? It's mostly green in this uptrend, which is what you would expect, okay, in an uptrend. Most of the aggression should be coming from the buy side, okay? And then as soon as we get up into the zone, the buyers just dry up. You know, you start to get more aggressive sellers. Then you get some aggressive sellers stacked together. Aggressive sellers, and what happens to the buy side? The aggressive buyers, the ones that are supposed to be highlighted in green, well, they just disappear. They're gone. All right? So what happens? Market sells off. Again, this isn't my chart. This is a user's chart, and everything here is gone automatically. What would that make the buyer with 11 contracts a trap buyer? Yes. Yeah, exactly. Exactly, Paul. Paul's talking about up here at the top, you got aggressive buyer, 36. Aggressive buyers, 36 contracts, aggressively bought, 11 contracts, aggressively bought, and the market cannot hold. So yes, that's going to be your trapped. That's actually what we term a retail flush. Okay, get the breakout traders that are expecting us to go past this zone or this level. Get the breakout traders, and that is going to fuel the market in the opposite direction. Okay. So whoever this is, I feel sorry for them. That's the sucker. Okay, those are the suckers. The 11 and the 36 up at the top. I mean, have you ever bought a breakout and got trapped? Well, here's how you can see it. Here's how you can identify it in real time. This user has also pointed out that the NOFT delta order flow histogram down at the bottom there is showing some divergence as well. Good question, Matt. What is the difference between stacked trades and stacked imbalanced? Stacked trades is just looking for the number of contracts, okay, of a certain number on any side of the tape, and then just seeing if it's if it's greater or not. Okay. The stacked imbalance is looking for aggressive buyers or sellers, and then looking for them stacked together. And again, all the settings are customizable, so you can decide how many aggressive buyers or sellers you want stacked. You know, whether it's 3, 4, 5, 10, however many you want stacked together to constitute a stacked imbalance zone. And same thing with the stacked trades. You can determine how many, you know, whether you want 1, 2, 3, 4 to be stacked together to actually have a stacked trade. No, block trades are block trades. Remember, on the previous example, remember this example, the block trades here are contracts of a certain size. Okay, so an actual order coming through of a certain size or greater. Stacked trades, as opposed to block trades, just the stacked trade setting, that is just going to see anywhere, either side, did we reach a certain amount of volume or not. Okay. Whereas the block sales are actually looking for an order of a certain size or greater. Make sense? Slight but important difference. Yeah. Okay. So again, same thing. This is a user's chart. I mean, look, just based on what I've told you so far, look at what's happening in this downtrend. Look inside the bars, okay? Our theme with the NOFT is look inside the market, right? I mean, just look at this. Is there any way you would have been going long in this downtrend? Just look at the numbers. Yeah, very cool, Wayne. Just look at the numbers. Look at all that sea of red coming down here. Right? Yeah, sure, you get the odd aggressive buyer, you know, trying to pick the bounce at the R1. Nope, sorry, you know, it's not going to happen, right? But what does happen is this user has noted there was a stacked imbalance of aggressive buyers as the price tested the previous low of the day. Well, that's significant, okay? All this way down, it's a sea of red, right? And then as soon as we come to the low of the day, we pop the low of the day, which was at 76.80. We pop the low of the day by a few ticks. Anybody ever seen that happen? The high of the day popped by a few ticks, 3, 10 ticks, something like that, and then the market reverses. Or pop the bottom, 3 to 10 ticks, and then reverses. Well, this is an example of that happening, and then look at what happens. The sea of red turns to a sea of green. Okay, so we're red all the way down. We're all the way down, right? And then all of a sudden we turn to green. And it's all green in, let's call this bar 1. It's all green in bar 2. Okay. Bar 3, yeah, there's still some red, so there's still some people trying to keep this thing down. And in bar 4, it's all green as well. So you can pick tops and bottoms with low risk, but it's not really necessary. I mean, it just becomes it becomes obvious. I mean, okay, well, cut the crap, Jay. Where's my entry? And remember, this isn't even my chart. I'm just interpreting what this person sent me, okay, or what I think I actually stole this from our Skype chat room. We have a Skype chat room. It's by invitation only. Basically, once you get up to speed with the NOFT, you can get an invitation into that room. The idea is that it's not a support room. Okay, it's a room for traders to share trade ideas and post their screenshots and what they're doing with the NOFT. So a lot of times I see some people post some good charts, and I'll just save them. So looking at this, well, where's my entry, Jay? You know what? Any entry from 76.85 down to 76.84 is a good entry, and your stop is actually, 76.80. 76.80 up to 76.85, anywhere is a good entry, and your stop is at 76.79. So you had anywhere from 1, 2, 3, 4, 5, 6, 7. So your maximum stop would be 7 if you were at the worst entry point, which would have been right there on the subsequent bar. Pardon me. The worst entry point actually would have been right there. Okay. So there's your stop, and yippee, up to at least 77 on this chart. Okay. So can you use this to identify the true support and resistance? Yes, you can. The previous low of the day, that's obviously support, right? But when you get down there, how do you know that it's going to hold? I mean, we got a sea of red blasting through the R1, okay? Sea of red blasting through the R1, going down to test the low of the day. How do you know the low of the day is going to hold with some reasonable probability? Isn't it obvious from this chart that, yeah, there's a good probability that this is going to hold? Am I right? All right, so we're about half an hour in. Questions before we continue? Matt, I'm a little bit sorry, Wayne. I'm a little bit conservative myself. I'll wait for the close of the bar. Okay. So I want to see that the numbers are finalized, but there are ways that we go through in in the members section. The members section has over 30 hours of video, and also you get, if you do the full payment purchase for the NOFT, you get 2 over-the-shoulder live training sessions with Kai, 2 group live training sessions with him. Usually those last anywhere from an hour to 2 hours on average, and you'll get a lot of the advanced ideas in that as well. But I like the bar to close, and then I can interpret where to actually enter once that bar is closed with high probability and very low drawdown. All right, any more questions before we continue? These webinars usually take on a life of their own. We have certain topics laid out, but usually I adapt the webinar to whatever questions are being asked and what the audience likes to see. So every trader is different. You've all got different trading backgrounds and education. You all come from different walks of life. You've all had different experiences in your trading career. Hopefully, more of them positive than negative. Unfortunately, that's usually not the majority. Paul, what time frame do you use to take trades? You can use any time frame you want, Paul. Me personally, I'll use anything from a 3-minute chart up to, let's say, a 50-minute chart. Okay, but you can use. What's great about the NOFT is you're not locked into any kind of specific algorithm for a type of bar or time frame. You can use it on time-based charts. You can use it on tick charts. You can use it on volume charts, range, Renko, custom bar charts. You can use them on any chart that you like. So if you're like this trader, this person's got this on a 8 range, right? If you like to trade range bar charts, you can use it on that as well. So it doesn't really matter what kind of chart you use it on. But for me personally, I like a 3-minute for something like, let's say, crude oil or the S&P. Whereas with something like, let's say, I don't know, the Japanese yen or some forex pair, I prefer something like a 15-minute chart. All right, so no more questions. Okay, we'll continue. Again, same thing. I think it was, who was it? Let me go back. Paul made the comment earlier about when he saw that there were green numbers at the top of the run, and the buyers got trapped, okay, or what that represented when there was green numbers at the end of the run. Well, here's the opposite scenario. We're having a downtrend here into this R1 pivot, and all of a sudden you get a whole bunch of aggressive sellers coming in here, okay? That is usually a telltale sign too that you want to be aware of. If you've been coming down on relatively light selling, okay, and then all of a sudden you get a whole bunch of heavy selling at an area that you've identified, aggressive selling, that's something to be aware of, be careful of, because that that oftentimes means that there's some suckers trying to sell the breakdown here, okay? So you're getting sellers trapped here. What happens on the very next bar? The sellers disappear. And does anybody use cumulative delta here? Anybody use delta? Familiar with delta? Well, the NOFT is actually showing the delta at the top of the bar there. And what's funny, we go from 233, if we call this bar 1, there's negative 233 delta. The subsequent bar, that's reduced to negative 60 delta. and the subsequent bar, all of a sudden, the delta goes positive. What's also interesting about bar number 2 is that you had all these aggressive sellers in bar 1. Bar 1, lots of aggressive sellers coming into that R1 level. And then what happens on bar 2, they just disappear. Okay? There's like no aggressive sellers on bar 2. All right? And then all of a sudden we start to see some aggressive buyers come in here. Okay? On bar 3. This user has also noted a divergence in the delta order flow histogram, and also a divergence in the volume. So again, different ways to use this tool and across different markets. Good comment, Apurva. Apurva saying if one wants to relax with a cup of coffee, beer or scotch, go for a 30-minute chart because you can get some breathing time and relax. Yeah. So again, this is anybody trade the bonds in here? This is a chart of ZN. So it's a 10-year, right? It's a 10-year treasury. Okay. And again, same thing. I mean, as we're coming down here, do you see any green or blue numbers highlighted and bolded? You don't. Okay? This is a market that is obviously in a downtrend and will likely continue to downtrend because if we just start counting up the red numbers, these are all the red numbers that I'm circling right now, red highlighted numbers. Okay? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 red highlighted numbers and 1 green highlighted number. That's right, Wayne. The sellers are in control. Okay. Explain delta a little. Yeah, Wayne. Wayne's got a good question. What is delta? That's actually the difference between the buyers and sellers. Okay. All right. So it's just a difference between the buyers and sellers, and then for each bar, they'll do the cumulative sum of that. Okay. So I think that's the formula. I think it's sigma and then bracket buyer minus seller, and then that's how you get the. Then they do that on every single level, and then that's how you get the number up at the top of the of each bar. You can look it up. I think that the calculations for delta, cumulative delta, are out there. So look that up. So again, another example of a test of the previous low of the day. All right. So previous low of the day, we actually test it to the tick, and on the bar that we test it to the tick, the aggressive sellers, you get a few of them trapped there, and then all of a sudden the aggressive buyers come in. Okay, Jay, well, cut the crap. Where's my entry? Well, I don't even need to show you. This user did a pretty decent job of that. Stop below the last aggressive buyer at 78.38. Their entry is 78.44. There's 6 ticks risk on this trade, and by the time this user took the screenshot, they're already up 14 ticks. Just a quick note on the zones. I don't care too much whether or not a zone is highlighted in red or green. You can see the stacked and balanced zone. It's highlighted in red. I don't care too much whether the zone is red or green. What I care about is what's the reaction off the zone. Okay? So in this case, the stacked and balanced zone is drawn. That's in red. That would be what we would call a stacked and balanced sell zone. However, the market's reaction to it was to move away from it. So obviously I would want to be on the buy side. So I mean, I could go on and on all day with examples from the users. you've actually learned a lot already about how to use the NOFT just from these examples. So I actually appreciate the users continuing to send in their screenshots and post them in the NOFT Skype chat so I can poach them. And so you've already learned a lot. We've talked about stacked trades, we've talked about delta, we've talked about stacked imbalance, we've talked about institutional block trades. Yeah, exactly, Wayne. Good examples. And these are all users' charts, not even my charts. So anybody can do this. It takes a decision, a commitment to go through the videos in the members section, write down your notes and questions, to put the NOFT up on a chart and watch it for a while, and also make notes and write down your questions. Get the help that you need through the 2 live over-the-shoulder trainings with Kai. And I'm also here for trade support as well. So some of the comments that are being pulled from the Skype chat room, these are just excerpts that I took from the Skype chat room. 30 ticks out of the signal. Gotta love this indicator. I've had 20 trades today and only 1 red one. Insane lucky day. My first 100 tick day ever. 126, a great day. Kai Whitney, by the way, luck is the result of preparation and hard work. Absolutely. Another user trading 10 contracts, 10 ticks on 10. There's another 100 ticks from another user. So no matter how you like the NOFT, it's fully customizable. So you can, the different settings, you can adjust them to whatever color scheme you like, put them on any chart you like. It's fully customizable. I've lost the chat there. I just need to bring up the GoToChat. There we are. Another screenshot from our members. Okay, same thing. High of the day. Tons of aggressive sellers. Single trap buyer. Boom. Also some divergence on the delta order flow histogram. Similar story. Pivot point. Come up into it. Aggressive buying into it. They can't punch through. Aggressive sellers stacked. Start coming in. Aggressive sellers. Market. Boom. Down. Here's the stacked. Somebody was asking about stacked trades. I think that was you, Matt. Stacked trades. Okay. So it's looking for stacked trades, another toggleable indicator. It's looking for trade, just the volume within the actual price point, and seeing did it go above or greater that particular amount of volume, and are there that volume or greater? Are there areas where they're stacked one on top of another? And that's what you have here. So this user is highlighting here how, as we came into the 78 area on this crude oil chart, on a 15-minute chart, obviously this user was interested in taking a position here, and that would have resulted in some nice ticks. So I'm just going to exit the slide presentation just for a moment, and let me bring up a chart from yesterday. Let's take a look at the ES. Okay. A couple of the trades I took yesterday on the ES, I'll just show you here. I actually went in. I was actually in up here at 2074 3/4, and I had a stop actually at 2070, 25. And unfortunately, the news came out and I got stopped out with a couple ticks loss on that. But no worries. And the market went down, and I've talked about this a lot in the webinars. I'm always telling people no need to chase the market. There's always a pullback, and you can see that's exactly what happened. We get this nice strong pullback, and then I was able to go short there again, and I'm going to show you why. What time was that? Somewhere between 9 and 10. So let me scroll back here to that time. Okay. So why was I willing to go short again after such a big move down and such a strong pullback? Why was I willing to go short again? Because as we come up into that same area, that 2072 area, okay, what started to happen? Well, first, I started to see some aggressive selling, okay? And on this chart, you can see I've got block trades toggled here. And so I see a couple block trades come in. So I believe I entered at 2070 3/4 with my stop just at 2072. So 5-tick stop, okay? And what happens? The market could not get above. Make note of that. See the two red horizontal lines here? The block trades. So let me change the pen color here. These two lines here, okay? The two red horizontal lines there, those are block trades, all right? And we also have a stacked imbalanced buy zone at this level. So remember, it's a buy zone, but I don't care what color it is. I want to know, I want to see what's the reaction at it. So I'm already in the trade back here, all right? So when we come back into it, I basically get 0 to maybe 1 tick drawdown on this trade, and nothing happens. Okay, the market just sells off from this point, and it's pretty obvious why. I mean, throughout here, the numbers are red. Okay, there's only one evidence that I might be wrong, and that's on this particular bar here. There's 4,099 contracts bought aggressively, and I was concerned about that, but that was just a matter of moving my stop one tick above that last block seller, because if they went through that block seller, well then yeah, we're probably going higher. But instead we just came and tested my stop within a tick or two, and then aggressive sellers, aggressive sellers, aggressive sellers, aggressive sellers, aggressive sellers. Again, it's a similar variations on a theme. Mostly aggressive sellers in here, right? Finally, the market breaks through, and we go down. Okay. So it really doesn't matter. I've shown you a lot of crude oil charts, and we've looked at the bonds, and now we're looking at the S&P. So it doesn't matter. Doesn't matter whether it's it could be soybeans. All right. Doesn't matter what the instrument, as long as you have the bid-ask information, and even on Forex, the NOFT will use the up-down tick information. You'll be able to see this. Okay. So I'm going to stop for a minute. Any questions? Yeah, Paul. The 499 isn't a block order. It's there were 499 contracts bought at that price level. Sorry, 4,099 contracts bought at that price level on that bar. Okay. And when you compare that to the other side, well, you compare diagonally. So we're not comparing 4,099 to 2775 or whatever it is. We're comparing 4099. We're actually comparing that one level down on the other side to 1127. So obviously it was 3 times greater than what was being put up on the other sides. So it highlighted in green. But yeah, it's funny that that much aggressive buying. That's another thing that you learn to interpret this the more you watch it. And so when you see this kind of thing, this kind of heavy aggressive buying, and there's no significant response, that is actually telling you something. That is sending you a message, hey, these guys are getting absorbed. We get that kind of aggressive buying, that number of contracts, and we can't pop the high. Come on. To be sure I understand, can you define blocked seller and buyer again? Yes, Chris. Block sellers or buyers, the block trades as we call them, okay, which you can toggle up at the top. Those are a order, one particular order. I'm gonna go to the paint program so this doesn't disappear as new contracts come through. So you guys know my voice hasn't been well the last week. Last 4 or 5 days has been terrible. But I'm getting there. All right. So block trades. Block trades, what are they? They are an order of a certain size. Okay. Certain size or greater. Okay. And they are defined by the user. Okay. Or by the template. We have templates, so you don't have to worry about. You can relax. We've got templates for lots of different markets. All right. But it can be defined by the user or the template. Okay. And so, for example, let's say on the crude oil, just for example, I want to define a block trade as an order of 25 contracts or greater coming through the tape. Okay, an actual 25 contract or greater order. So if somebody just clicks 25 contracts, just buys or sells 25 contracts, all right, then the NOFT is going to draw a line at that level. Okay. Now, the NOFT is not using any algorithm to rebuild broken up orders. In other words, if somebody's come in and said, well, I have an algo that, if I want 25 contracts, it's going to break it up into 5 contracts. No, that's not what we're looking for. We want somebody to come in who's big, aggressive, and wants to buy or sell, doesn't care whether or not they hide their intention to the market. Okay, they're just going to sell those 25 contracts or greater, or buy those 25 contracts or greater. All right. So is everybody clear on the block trades? All right. So that's block trades. All right. So no fancy algorithm to try and rebuild the tape, or no. We just want to see, is somebody willing to sell that size? Okay. Or is somebody willing to buy that size? That tells us something. Okay. Somebody doesn't care, and they're just willing to do it. Well, hey, somebody with some money is wanting to come in and play. You better pay attention, right? All right. So we're about 55 minutes in. I suppose I could go through more. Let's see. One question from Matt here, and then I'll kind of switch the speed and topic of the webinar. the POC went right to the top of that 2022 bar. You must have been sweating a little. No, it's funny, Matt, because what was funny, I started sweating on this bar, okay? So let me take away the other arrows. The bar where there was that 4099 aggressive contracts bought, that was the bar I started sweating on, okay? The subsequent bar, I was actually quite relaxed because, one, it hadn't popped that last block seller at 2071.25, and it was a very neutral bar. If you look at that bar, there isn't really aggressive buying or selling in that bar. And then on the next bar, I started even sweating less. Why? Because it was a down bar. It came within 2 ticks of my stop. And what showed up within that bar? Well, the red cell here is actually a block trade that you can see the line extends out there. Okay, so a block seller came in, and then also there was aggressive selling just below that block seller. So it was only that bar there with that 4099 aggressive contracts bought. That was the only bar that I was sweating on. The next one I was like, no, doesn't look like they're doing anything here. The third one, I was relaxed by that point. All right, so I'll go back to the slideshow because I kind of want to keep this webinar short, simply for the sake of my voice. You know, one of the things, really what is the NOFT? Obviously, it's a software developed for any transparent electronically traded market, developed by a seasoned ex-Wall Street trader in conjunction with indicators. That can't be discounted, okay? The fact that it was developed by somebody who worked on Wall Street and actually knows how the market works, that in and of itself lends a lot of credence to what we're doing. I'm just going to skip through a lot of this stuff. We have a ton of charts and examples. I'm keeping this webinar very short. We've got volume composite indicator. Okay, you can go through the webinars. As I said, I'll be Paul, you made it good. Paul, that's great. Paul says he doesn't know how many traders made up that 4,099 contracts on the S&P, but he thinks they need the NOFT. We've got a dynamic volume profile indicator, okay, that's included in the NOFT. I've seen it sold for $349 to $499 US. That's actually included within the NOFT, so you can actually draw a profile from point to point on the chart manually. Delta, we've already gone over that a little bit. I've already showed you how it's displayed on the chart, and we've got the NOFT Delta order flow histogram. I'll just quickly mention this one. I like this one because you can actually set a threshold. So on this S&P chart, I've actually got a threshold set to positive 2,000 and negative 2,000. So when the Delta histogram hits negative 2,000 or 2,000 or greater, then it will actually, you can get an audio alert, and it will also draw little rectangles within the histogram itself. So it's a good histogram to watch for divergences, if there's any divergence traders in here. So, part of the reason the NOFT was developed was that in the retail space, there isn't really many professional grade tools available, okay? Most people do not understand how the markets work the way they do, okay? And obviously the focus in the retail industry is the profitability of methods and systems. People are always looking for that holy grail. And they use lagging indicators like MACD, RSI, these kind of things, moving averages. So that was part of the reason for the development of the NOFT, was to get a professional grade toolkit into the hands of retail traders and use market generated information, which is actually the number of contracts bought and sold. So that was one of the driving reasons behind the development of the NOFT. And the other thing was, all those things like block trades, those things that I've shown you today, we used to have to do those manually, not anymore. Yeah, most professional traders, as far as I know, Paul, are using levels and the order flow. They're just looking at key levels and then looking at the flow. But I mean, they're also trained on the fundamentals as well, and they've got their teams of researchers and their programmers and their quants and all that kind of stuff. So the whole idea behind the NOFT is to give you an edge, to at least be able to compete with them. So what's included in the NOFT? Well, we've gone over the order flow sequence tracker already today. We've talked about imbalance within that, block trades, stack trades, okay, trade size. We've gone into another indicator called the iGhost block. That's the one that puts up the stacked imbalance in the block zones. We haven't covered a lot of these other indicators today. I'm keeping this webinar very short. If you want more information, you can arrange a one-on-one with me, or you can check out the YouTube channel. I'll post the order page as well as my email. Everything is in your GoToChat. Your GoToChat should be flashing with the order page, my email, my Skype, and the YouTube channel. We touched very briefly on the dynamic volume profile and the volume composite. The rest of these things we haven't talked about. I'll go through them in another webinar, simply because I want to reduce the size of this, the length of this webinar. I think you can see today already what your immediate benefits are going to be with the NOFT. Okay, you're going to stop missing out on the key information. All right, and you're going to utilize the transparency of the market that's still available. That's the number of contracts bought or sold to your advantage. The NOFT, a lot of the hard work is done for you. It places the information on the chart in a very accessible format. You've seen it, basically highlighted numbers, lines on the chart, very easy, set it and forget it, all right? And it highlights that important information so that the footprint is a lot more logical and easier to read, okay? I think that's a real, that's significant, is the important information, okay? It highlights the important information, all right? You can locate, I've shown you today how you can locate the clusters of large individual or clusters of large institutional orders with the block trades and the trade size, okay? And then that's going to help you get on the right side of the market, all right? Showing you how to easily identify the imbalances in the market and trade with them, okay? And the whole, the bottom line in trading is, if you can reduce the amount of your stop size, reduce the amount of times you get stopped out, and really have more confidence, that's what trading is about. That's what's going to help you maximize your profits. I could go through tons and tons of examples. I've got chart after chart after chart, and I'm just kind of scrolling through these because if you watch this webinar after I upload it, you can obviously freeze it and take a look at the chart, right? Just a quick note about the iGhost block. We talked about block trades. Well, these are block trades stacked together. That's what the block zones are. Okay, and again, it's market generated information. This zone is drawn based on block trades going through this level, and you can see that acts as a true support zone. We don't get through it, and then eventually the market goes up. We form another block zone, but we can't get through it. We test it a couple times, and then we go down. Again, NOFT can be placed on any kind of chart. You can see that this is actually a structure chart, like a candlestick chart, okay? And we've actually got the zones on the candlestick chart. So if you still want to watch a candlestick chart, you can still do that and still get these zones drawn on your chart. Trap block buyers up here. Yikes. Another stacked imbalance example. Multiple entries available here. If you were only trading with the trend, you got multiple entries. We create this first stacked imbalance zone, one possible entry here. As we test back into it, we can't get above it. Come back, test it again, second possible entry. Break down, can't get below this sell zone created here. Come back up to the next sell zone, third possible entry, go back down, can't break below it. You could take a counter trend trade there if you wanted to, but I'm just showing you the trend trades. Come back up, can't get above the sell zone again, fourth potential entry, we go down, finally break through this sell zone here, create another sell zone here, swing back up into it, can't get above it, another potential entry there. So you got 5 possible trend trades just on this 3-minute chart of crude oil, just using the stacked and balanced zones. Delta tracker, I'm not really going to talk about that. I'm going to bring this webinar to a quick close. Here's another user's chart here. Come down into a level, all of a sudden the sellers, aggressive sellers just disappear on this bar, aggressive buyers start coming in, aggressive buyers start coming in. And what this person noted, which was a little point of interest, is you had a very large number of aggressive sellers back up here, 558 contracts, and what they're speculating is that this 501 contracts that's aggressive buyers was them having to, reverse or get out. So I think we've shown today multiple examples of how you can identify the true support and resistance, or the true supply and demand in the marketplace. The bottom line is you have to ask yourself where you are as a trader, all right? Are you still losing? Are you break even? Or are you consistently profitable? And the whole idea behind the behind the NOFT is to get you to CP, consistent profitability. So I hope through this webinar today you've been able to see some light at the end of the tunnel in your trading career. Again, I am available for one-on-ones. If you're think you're ready to get started with the NOFT, and maybe you just have a few questions that need answering before you order, feel free to contact me through my email or Skype. In summary, why you need it. Accurately interpret the story behind the price market, behind the price action. There's a lot of price action traders out there, and there's some really good ones, and I congratulate them on their skill in being able to read the price action. However, what we've shown here today is how the price action can lie to you, and how that when you come into a low or a high, how you can interpret it accurately, what's actually going on, because we're seeing inside the market, we're seeing inside the bar, seeing inside that price action. Another thing about the NOFT is I find that I spend less time at the screens now because I can quickly locate key levels to do business with things like the stacked imbalances, the block trades, and the block zones, and ignore everything else. And you can have an edge. A lot of the examples that we've shown today, you can see how you're clearly in a downtrend or clearly in an uptrend, and how if you were just thinking that, okay, well, we're in a downtrend or we're in an uptrend, I should only trade in that direction, you would have got slaughtered by entering on those false breakouts. Okay, and you're going to be able to enter the market where most traders are going to be. You may not be able to pick the top to the tick or the bottom to the tick, but you're going to, you can probably be anywhere within 3 to 10 ticks of that top or bottom. So you can enter the market with greater precision and greater confidence and enter where most retail traders are afraid. And, my question to you, it's rhetorical really, is, so who is entering at those tops or bottom? Okay? And we know who. That's the smart money. And I've shown you today already how to position your stop loss intelligently, which means putting your stop loss in an area based on market generated information, not just a swing high or a swing low, or the low of the candle, or the high of the bar. All right, you're putting it in an area where you don't expect the market to go to, based on volume, the market generated information. Again, trading is such a psychological game, it's kind of beyond the scope of a lot of the webinars that I've been doing. Maybe I'll do a specific webinar on psychology and how the NOFT can help you with that as well. But just having tighter stops, getting stopped out less often, having a high probability of being on the right side of the trade is actually going to help you be in control of your emotions a lot more. Any of you who are interested in trading managed funds, managed money, okay? We actually do have a firm that we've partnered with for stocks. So if you're trading stocks or ETFs and you become a NOFT member and you're consistently profitable, we have a firm that we can introduce you to put up, you have to have some skin in the game, you have to put up some money yourself, but they'll provide you with capital that's going to provide you with leverage. And it's a win-win-win for everybody. You've got nothing to lose by trying the NOFT and everything to gain. We've got payment through PayPal. If you don't have PayPal, well, you can still run your credit card through there. You're going to get access to the members area with over 30 hours of video to quickly learn the NOFT. We've got PDF Quick Start cheat sheets as well as the templates. And Ninjacators is actually the firm that programmed the NOFT. And for trading support, obviously Kai and myself are available. Full payment purchase of the NOFT is $34.97. I believe it's actually $34.99 now. Okay, it's $34.99. Okay, and we also have a lease option. So I'll just quickly show you the members section, and then well, here's the order page first. So we didn't have time to go through a lot of what the indicators do today, but I showed you a lot of the core stuff and stuff that I use. So you go to the order page and you scroll down, it gives you a description of each indicator. Okay. Scroll down to the bottom of this page, and your lifetime license of the Ninja Order Flow Trader Ultimate, the NOFT. It's going to give you all the indicators that you're seeing on that page. The order flow signal generator, which is what we call the NOFT reversal signal. We didn't have time to go into that today. You're going to get that. You've got the on-demand video library of over 30 hours. I really want you, when you buy the NOFT, I really want you to go through the videos first before you even put it up on a chart. Okay, that's the best thing to do. With the full payment purchase, you get 2 group live over-the-shoulder trainings with Kai. Okay, so you're getting trained by a Wall Street trader during those sessions. Okay, you'll get all new version upgrades, software editions, and educational editions. We do have a money-back guarantee. Okay, and it's $34.99. Now, for those of you that are looking for a lease option, we also have that as well. It's $4.99 down and $1.99 for the first month, and then $1.99 a month after that. Okay. What's cool about this is that down payment, the $4.99, if you decide later that you want to upgrade and get the lifetime license, that $4.99 can be applied to the $34.99 for the lifetime license. So full payment or lease, it's up to you, whatever works best for you. Please check out my YouTube page. I have put it in the chat. This webinar is recorded and will be uploaded to that later. Now, here's the members section, okay? So when you come to the login in the members section, you log in after you've got your password. Hey, I did log in. All right, there we go. Okay, so this is the login welcome page. Okay, please read the instructions. I want to get them to actually switch this. I want this to be A and B switched. I want you to watch the videos first. So just do that until I get them to change that. Watch all the videos first. And why? If you click over on the left of the members area, you have all these videos in here. Okay. Product upgrade presentation, advanced product education, getting started, importing charts and workspaces, first steps with the toolkit, footprint basics, bid-ask ladder basics, learning to read the footprint, institutional order flow basics, getting an edge using order flow and knowing where the block trades, where the big picture is, learning to use the order flow sequence tracker, block trades and data reporting, discovering an edge in any market, getting to know your tools, learn how to use the tools, institutional signal reading, and it goes on. And we're adding more videos as we go through. Okay, so that's, there's over 30 hours of video in there, and then you add to that my YouTube channel, and you've got a lot of resources, as well as access to myself and Kai. We've also got PDFs in here. Okay. Got something we call the construct. This was a document created by Kai, kind of setting the tone and a lot of examples and what we're looking for in reading the NOFT. We've got a 5-page PDF cheat sheet. So, after you've gone through the videos, then you can go through and install. We've got a complete setup, just one file for you to download. Okay. If you want to download individual aspects of the indicator, you can do that. But the whole toolkit, you just have to download one file and import it through your NinjaTrader. And if you scroll down to the bottom of the file section, what you'll see here is you've got chart templates to download, and we've got different chart templates for these markets: the ES, the NASDAQ, Russell, Dow, DAX, gold, crude, currencies, and the bonds. Okay. I believe it's for 2 computers, John, but you just can't use them concurrently, so you just can't use them at the same time. Okay. And if you need an additional license, we can arrange that at a discount. Okay. Yeah, I mean, for Forex, Bill, I just use the 6E template. And then if you're actually trading Forex spot, well then you'll have to do a little bit of modification in terms of the settings, but not much. I'll show you Forex chart in a minute. So yeah, you download and put the templates into your chart templates folder within Ninja. If you want Kai's personal chart templates, he's got those in here. And if you want workspaces, you can download the workspaces as well. the block trade filter settings, those settings are actually incorporated into the template, so you don't really need to worry about that unless you're not using a template. Then you can download that PDF, and that will tell you, that will give you a guide to the settings. So before we go, just to acknowledge Bill's question there, let's there's the euro yen pair, Bill. Okay. Because there's only up-down tick data available, we don't get the block trade information. However, as a substitute, we can use trade size. Okay. And what you see here is the numbers are actually numbers with decimals after them. Those are actually millions. So you're actually getting, 4.9 million, 5.8 million, 1.7 million. Okay. So that's the format it's in. But it's the same thing. You can see the imbalances here. You can see what we call auction lines, which are these gold lines on the chart that extend into the future. Those are showing us areas of what we call unfinished business or incompleted auctions that the market is likely to come back to in the future. I like those as areas to hide my stops behind. And same thing, here's the CAD, USD CAD. Okay. Here's the old favorite, the euro. Okay. Yeah, it's in millions, Bill. So one lot is 100,000, right? So the million is actually representing at least 10 lots. So it just shows you how much is actually being traded through FX. Here's another one of here's the British pound, Japanese yen. So again, it's the same variations on a theme, now a completely different market. Get a bunch of aggressive buyers coming up to try and push up to 188, and this bar here, right? Aggressive buying, they can't hold it together. Start to get a couple aggressive sellers come in, and the market just sells off. So variations on a theme. Yeah, it's a 15-minute chart. So I want to thank you all for joining me today. It's been a quick webinar. I've kept it short. Yeah, it'll work on a daily chart, Bill, and then the thing that you do is you just, the daily chart is obviously you can have hundreds of ticks, so or 70 plus ticks depending on the market. So all you do is hit control, and then you'll have to scroll out because it will probably squeeze down the thing. It'll squeeze it so you can't see it, right? You just hit control and then left click your mouse on the side, and then you'll be able to see the numbers like that. Very welcome, Paul. Thank you, everyone. This is the first webinar that is going to go under the time. The first hour-and-a-half webinar I think I've ever done. So thank you for joining me, guys. We have another webinar at the same time on Friday, or pardon me, no, we don't. Next webinar. Let me check that. Next webinar for me is 9:30 a.m. Eastern Standard Time, Saturday. So I will see you then. If anybody needs a one-on-one before they purchase the NOFT, please let me know. Email me or Skype me, and I'll try to accommodate you as quickly as possible. Thanks for joining, everyone, and see you at the next webinar. Look forward to becoming a member of the NOFT. Bye-bye.